is the wrap-up for the live market open on January 4th, 2016. Make sure I won't confuse. We're already 2016, the first show of the new year. We had an exciting end to the year and exciting weekend. Figures in the United States were a bit disappointing, but we didn't hear any new hymns from the Fed. The big news over the weekend came from the Middle East, Iran-Saudi Arabia clash. The Saudis executed a Shiite cleric, an opponent of the regime in Saudi Arabia, and the Iranians didn't like it. This followed, the relations now are bad. This has an impact on oil prices, and this has an impact, sort of worries all over the world. This was exacerbated by news coming out from China. A miss on Chinese manufacturing PMI with 48.2. Another devaluation of the Chinese yuan means more currency wars, and stock markets in Asia reacted with a big slide. Also in Europe, we're seeing more of the same. This risk-off atmosphere means a stronger euro and yen because of safe haven flows. The yen has always been a safe haven, and the euro, it's relatively new. It's something of the past year or so. Euro-dollar 109.25 on the higher range, 109.50, 110, 110.70. To the upside, 108.80, 108 to the downside. Dollar-yen, big fall to start the new year. Currently around 119. Maybe it did find the bottom as we talked before, but maybe not. 118.20 is the next support I see. 120 is resistance. Pound dollar had a nice slide towards the end of 2015 and began the new year with a gap, a dip under 147. And basically, no rate hike is expected from the UK. Soon we'll have figures. We'll talk about that. Dollar CAD in range, still shy of 140. The line it sort of looked above late in 2015. 137.87 is support, 140 resistance. Oil prices began the week higher, the year higher because of tensions, but they might slide once again. I am bearish on oil. Aussie dollar risk off, worries about China, currently 72.20, which is the battle line. Lines to watch 72.80 and 73.60 to the downside, 71.50 and 70.60. Kiwi dollar had a nice finish to 2015, got closer to the resistance at 69, but this risk-off atmosphere sent it down to 67.65, support at 67, resistance 67.90. Okay, events for today are all around PMIs. Finally, Eurozone PMIs are not expected to have an impact. Manufacturing PMI in the UK is important. As in many developed economies, manufacturing is the weaker link. Let's see if the UK falls into contraction in this sector or not. Not so sure, but anyway, it's the weaker figure. Also today, German CPI feeds into the more important all Eurozone PMI. CPI, inflation numbers, which is of course important input for the ECB. So we have German states releasing these figures during the morning and the final figure at 1 GMT. Let's see if we have another figure out from, no, we don't have it, from the German states. And the big event for today, the first hint for the non-farm payrolls, we have the ISM Manufacturing PMI in the United States. It was in contraction zone in November. Let's see if in December we have a small improvement, and also look for the employment component for a hint towards the non-farm payrolls. Before we go, I see we have